Hey, good morning, everybody. It's just about 10 o'clock, and I'll just let a few more people get on. I said I'd start at 10. It's about 9:59, but today is Memorial Day in the U.S., and it's been a quiet session. Usually, these holidays are pretty quiet, but I thought today would be a good day to do a presentation on FlowsDriver. There's a lot of traders don't really understand how a market is driven, what drives a market. And it's important because, you know, a, a market is either moving or it's not moving, in the sense of, sort of being range bound or trending. And, we all most of us, use indicators in some form. I have my own order flow based indicators. Other traders use momentum based indicators. Some traders use support and resistance, which, is in a way of a form of an indicator. And, you know, there sometimes there's just it seems like there's no one size fits all, right? You can't use um, you can't use a non-trending type of indicator um, in a market that's trending, right? You want to use it when it's in a trading range, right? And you want to use a momentum-based indicator when the market is trending. But when it comes to order flow, what really attracted me to order flow years ago was the ability to see what's happening, how the market is trading before a move happens, or if we're in a trading range, right? When we're in a trading range, the order flow that you see going through looks very vanilla, right? Looks very plain. There's nothing special about it. But when you start to see things that are different, right? I don't want to say unique, but certain type of activity coming into the market, you know, it's coming in for a reason, right? People have thoughts of the direction of the market and they're willing to put their money where their mouth is, right? Small retail traders, we just don't have that ability. We're too small. But the big traders, the people that really going to move the market, do have that. And what I want to talk about today is how to see that in the market. So, you know, before we jump in, just a brief disclaimer, do understand trading involves risk, right? And risk capital is money that can be used without jeopardizing your lifestyle, right? Or your financial security. Um, only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. People are nowadays trading a lot of Bitcoin, right? And unfortunately, a lot of people are doing it on margin, and they're finding out the reality of trading when the markets only don't go up. Okay, so don't don't risk your family's money unless you have other money to to back it up with, so to speak. And again, past performance is not necessarily indicative of future results. All right, so let's jump into this. The topic for today is sort of a new way to analyze order flow. Because that's what's fascinating about order flow. Even though it's order flow in its sense has been around, people have been trading with order flow for well over 100 years. 100 years ago, back in the 1920s, as opposed to where we are right now in the 2020s, um, we experienced a big, massive bull run, right, leading up to a big market crash and depression. But back then, people were even using order flow. Now, it wasn't as advanced as it is now. They were looking at a ticker tape scroll across the, literally a piece of paper coming out. We've all seen those old pictures, those old movies, and now it's with the advent of computers and especially personal computers and even advancements in the hand phone, literally people are able to get this information in the palm of their hands almost instantaneously, not as it trades, because there is a lag between the data coming from the exchange to you, but it's still very important information. Okay, so I'm not going to talk about the beauty of order flow. We all know, we all understand how order flow can help us. Really, what I want to jump into today is sort of 5 topics, right? What type of trader are you? What drives the market? Markets to trade, parabolic moves, day session versus night session. So, all of these are important in sort of, well, determining if you're going to be successful or not, because ultimately, as a trader, it's you, right? It's not necessarily you against the market where, you're fighting against, market movement and stuff. You're sort of fighting against yourself in a way, right? Making the right decision. And sort of what that comes down to are, some of these topics that we're going to be talking about today. So, what type of trader are you? Okay. And there's basically five, in my opinion, five types of traders, right? There's scalpers, there's day traders, intraday, swing traders, and long-term traders, right? Scalper, in and out quickly, a lot of trades during the day. Day trader, a little bit slower than, a scalper, a lot less trades. Intraday swing trader, are the guys that are looking to catch, the one or two big moves if there's going to be one in a day. A swing trader, someone that's going to hold a position for a few days. And a long-term trader is, someone that's going to put their money in the market and let it sit there, um, for however long, months. I don't want to say years, but months at least. So you have to determine what type of trader you're going to be. Myself, I sort of fall in under the scalper, not so much the day trader in the sense where I pay low commissions. I'm happy to take a lot of trades. The reason I'm happy to do that is because I know my time is limited. Okay, I can't sit in front of a screen for 6 hours, 8 hours a day. That a lot of people are like when I was younger. Okay, I just don't have that ability anymore. Hang on a second here. Uh, Okay, so where are you? Okay, are you a scalper? You like to take a lot of trades? If you're an order flow trader, if you read order flow, it's going to be in your best interest to be as short a term trader as far as holding a trade than a long-term trader, because you're basing your trading decisions off of what's happening right now, whether you get into a trade, whether it's based on what is trading now. However long you want to hold it is another part of the equation, right? Because as you're reading the order flow, as you're in a position, as you're in a trade and you're reading the order flow, it's going to give you new information. Should you still be in the trade? Should you not be in the trade? Right? And in my opinion, sort of what the difference between a scalper and day trader is partly coming down to your take profit levels, right? Scalpers really quick, the when there was the trading pit on the floor, there were groups of scalpers, right? There were guys literally that would hold a position for 3 seconds, 5 seconds. If it just wasn't in their favor, they would get out. Okay, they weren't looking to hold into this position, a long time. If they could get out at a tick, that's it. They're fine. That's really in the pure sense what a scalper is. Now people sort of lump in scalpers and day traders in the same group, but for me, I would define scalper as somebody that's much more short term than a day trader. Okay, day trader, may get into a trade in the morning, 8:45 and hold it until 10, till 10:30. Okay, whereas an intraday swing trader, may get into a trade at 9:45 and hold it until 2 o'clock. Okay, but a day trader takes more trades than an intraday swing trader. Swing trader, I don't do that anymore. I don't like to necessarily, I don't want to say take the risk, but I don't like to sit there at night always checking the market and stuff. I hated that. Back when I was working, I'd hate getting calls that literally in the middle of the night over a position or something. It's just like, I don't like to take my work home with me, so to speak. That's why I really wasn't into swing trading. And but there's good profits to be had there. It's not to say that swing trading isn't for everybody. For certain people it is. Now long-term traders, it's funny because when people say, oh, this trader's got ice in their veins, they tend to be like a long-term trader, is because they're not bothered by the intraday price swings, the way a day trader is, or an intraday, or even a swing trader. A long-term trader is just like, yeah, okay, put my position on and, just sort of wake me up in 3 months and, like something like that, but it's not like they're so cold and calculated the way, a scalper would be. A long-term trader sort of has this big macro view of the market, whereas scalper has, a very, very micro view. Most of everybody is putting in there what type of trader they are. A lot of scalpers, right? 10, 15 seconds, um, 10 to 20 seconds. That's fine. Like for me, when I'm scalping, I'm looking for that market to move based on the order flow. I'm looking for it to happen right now, right? And if it's not happening after 10 minutes, I find those, for me personally, those are the worst trades that I take is the trades that, I get in and they immediately start going sideways or, start grinding against me. That's where, being a scalper, you understand that, time is of the essence. And if the market doesn't move in your favor, it's probably not going to make that move. All right. So the second part that I want to talk about is sort of what drives the markets. Okay. Now, obviously, all of us are retail traders. In the past, I used to be in a different category. I used to be on an institutional side, but since 2013, I've been on the retail side. And again, it doesn't matter whether you're a retail trader trading one lot or a 50 lot. If you're a retail trader, you're a retail trader. Size doesn't matter. When you start talking about the different types of traders, the really big traders are sort of the traders you never hear of. Yeah, you read about these um, hedge fund guys and all that, but really the biggest traders are what they call the real money traders. Okay, people like the sovereign wealth funds, um, the real money accounts, right? The pension funds. Not these hotshot hedge fund traders. Yeah, they're the ones that, oh, you see, oh, this guy made uh, $2 billion. Well, a lot of it comes from fees. Obviously their performance is also tied to their payout, but honestly, you got $5 billion on a management, and if you perform well, you're gonna get a big payday. Um, it's those are big traders, but in my mind, those are not the biggest traders, right? The biggest traders, I'll give you a sense of size. Um, I've seen the orders that are generated by a central bank in Hong Kong, okay, and I've seen their rolls at S&P roll time, okay, and it's massive, right? You don't think about how big it is, as a retail trader, but you just sort of sit back and you're like, wow, um, you're talking in the tens of thousands a position in the big S&Ps, okay, and put that in relation to minis, right? Well, the ratio is 5 to 1. They're rolling 70,000 big S&Ps. That's what, 5 to 1. 70,000 is, do the math. That's like 300,000 minis a position that they have on, right? And so they're not really so concerned with the little price fluctuations during the day. That's why I say these long-term traders, guys that just sort of dig in and hold it forever. And there's a lot of reasons why they would hold it forever, not forever, but hold it for a long time. They have to have a core position and they just sort of trade around it. To me, those are the big traders, right? The big pension funds that have tens and 20 billions of dollars under management. You don't hear about those hotshot traders at the California Retirement Fund or something like that, right? You don't hear about them. I mean, they make very good money. Obviously, those big hedge fund, those big real money account traders get paid a lot of money because if they don't, they just jump to a hedge fund. But you don't hear about them the way you hear about hedge fund traders. But those are really the big accounts, and those are the ones that really drive the market. In the short term, a hedge fund, yes, it can drive the market, but really, what sort of drives the market are these real money accounts. Okay, and people don't really talk about them, but when you talk about real money accounts, it just so much bigger than what you see in an individual hedge fund. But at the same time, everything that everybody trades shows up in the market, and if you know what to look for, then yeah, you can see it. Now, this is where it starts to get interesting, is because they don't always just trade during the US day session. A lot of these really big real money accounts are based overseas. Okay, so sometimes they're going to be active when the markets are not trading during the US hours. Um, there's a question there. Chris asks, the ones that make up the commitment of traders, yeah, they do show up in the commitment of traders as, an institutional thing. It doesn't, I don't think they have, I haven't looked at it recently. I know a few years ago they made some changes to the commitment of traders, but yeah, it does show up in the COT, the commitment of traders, their activity. With the commitment of traders, once you get over, exchanges have limits that a entity can have on, right? Position limits. And, once you get above a certain limit, then you have to disclose that, okay? You have to file paperwork with the exchange, and not everybody can. I know, like, for example, like grains, right? They have a 5,000 contract limit for corn, wheat, soybeans, etc. And hedge funds generally can't get above that limit. They get above that limit, they start getting notifications, and their broker they're the prime broker, because they're so big, they use a prime broker, generally has to get them out of that trade if they don't get out of it, because there will be fines. And people understand that, oh, if a customer violates things, it's up to the customer to get out. No, the broker will get them out, because if the broker doesn't take care of the issue, the broker then starts running into issues with the exchange, right? And worst case scenario, they can lose access to the exchange. I know that when I was at JP Morgan, Osaka exchange, where they trade the Nikkei in Japan, JP Morgan, we would give clients access to the exchange. Big other trading firms can, were our customer, and they would route through the JP Morgan infrastructure, and we would have, there was, every once in a while we'll get a call from the exchange saying, what's going on. And we're like, on our end, we don't know what's going on per se, but they'll say, why are you entering so many orders and canceling them so quickly? And what these prop firms would do is they have these algo, and as literally as soon as the window opens up for pre-market, entering the orders as early as you can, they would have this program that would just shoot in orders at every price level up and down the price ladder. So they'd be first in queue, right? So when the market opens, you know, being first in queue, it's a first in, first out, being the best bid at every price level, or close to the best bid at every price level on the way down, is going to be in your favor, especially when you're trying to scalp the market. So, they would enter all these orders, just barrage, just inundate the system, because it would generate a lot of ticket numbers from the exchange. And sometimes, these exchanges, too much activity causes it to slow down. But they would cancel, the ones that weren't first in line, they would cancel, re-enter orders. And, the exchange would just be like, hey, you know what, this is causing a problem, stress on our system, stop it. And so the broker, JP Morgan, tell the customer, stop doing that, because if you don't, then the exchange is going to put, I'll say sanctions, but they're going to revoke our access ultimately if you keep playing these games. And if you don't stop playing the games, then we're going to kick you out as a customer, basically. So, even though there's nothing happening on our end on the trading desk, it's happening someplace else. So, these big traders are much different than retail traders. Now, the the thing is, with markets, especially when it comes to order flow, right? Before I start jumping into some of these order flow things, please understand, right? There's more than just E-minis and NQ. Okay, I know that that's the market that most people are interested in, is because of the low margins, and obviously now you got the micro contracts. But honestly, if you're trading something because it has low margins per se, that itself is probably not the best reason to trade that market. You should trade a market that, in my opinion, is easy to trade. right? I mean, why trade something that you're sort of forced to trade because you're restricted by, the amount of money in your account? And, I get the whole thing of I don't have a lot of money to trade. You can trade obviously now the micros, which is a lot less, but, you know, make sure you have enough money in your account to trade. Look at other markets at least, because, the thing with E-minis and NQ is the type of players that are in there are obviously very sophisticated, more so than the retail trading crowd. Now that's not to say that everyone in the retail trading crowd is not sophisticated. I've seen some very sophisticated trading systems, but I just feel like you're sort of putting yourself at a disadvantage because there's so much algo activity that happens in E-minis and NQ that for a lot of people, they can't handle these quick moves. Now people say, well, NQ is more volatile than ES, but there's a ratio. E-minis move 2 ticks, NQ moves 10 ticks. People say, well, NQ is such a bigger um, thing. So it's, just bear that in mind, okay? Just bear that in mind that there's many other markets. And the reason I talk about that is because, people sort of put themselves at a disadvantage when it comes to trading the market because they don't necessarily understand what they're doing per se. Um, and I just feel that there's so many other markets that follow order flow that aren't driven, that don't have that algorithmic activity, that don't have that hot money in terms of hedge funds in and out of the market, that if you're going to trade with order flow, it's really, in my opinion, sometimes better to stick to markets that are really sort of still true to their roots in the sense of, you know, they have big commercial participation. Commercial participation leads to support and resistance levels holding much better, right? And, when you have support and resistance holding better, then it's a bit easier to read the market, not just necessarily read the order flow. Yeah, it makes reading the order flow a lot better, but, the moves seem easier to find. Okay. So, you know, if you were to ask me what the top non-equity markets are, right? I would say, um, obviously the currencies, right? And that should be an easy one, right? Now, obviously the currency futures are related to the cash market, but they follow it pretty well. There's honestly, the big banks are more involved in the cash market than the futures market, although they do trade a lot in the futures market, but really the majority of their activity is in the cash market. The grain market is a great market to trade. And it's, if someone were to put a gun to my head and say, you got to trade and you got to make money, I wouldn't trade E-minis or NQ. I would trade one of the grain markets. Okay. Now I have the ones that I like, right? Soy meal, um, to a certain extent. Wheat, corn now is much more active. In the past, corn was a very boring market, but now obviously with the inflation, hitting the grain markets, corn is getting some nice movements. Soybeans is a little bit more volatile than um, wheat or corn, but that's also a nice market. Um, Crude, okay. Nat gas, okay. Gold and silver, yeah, I mean, they could be volatile at times, but they're also nice markets. There's a lot of nice markets. Bunds is a terrific market to trade, especially if you're in Europe. Um, because of the trading hours. And, it's 10 euros a tick. It trades it's decimalized. Unlike the bonds are still in 30 seconds. There's a lot of nice markets out there beyond just equity indices. Okay. Just bear that in mind. I'm not saying you have to trade those or look at them, but, I just find those markets tend to move better, in my opinion. Some of the moves are much cleaner. So, all right, let's sort of jump into the order flow here. Just give me a second here. What chart do I want to look at? Make sure I got the right chart up. All right, just bear with me. So what do I got here? This is British pounds. Okay. Well, we'll start with British pound here. Just so this is a footprint chart. Okay. What's going on here with my system? Hang on. I had to replace my mouse. So it's like if you hear something very clicky, that's my mouse. So this is this morning. Let's give it a second here. All right. So obviously today, very, very quiet day in the markets, right? It's a holiday, okay? And in there really wasn't much movement in the market. This is a British pound, okay? Um, anyway, okay, well here, there's just a nice move that just happened in the British pound. It shot up, was that 141.85 all the way up to 215, right? It's a nice parabolic moves. And I'm gonna talk about that parabolic moves in a minute, but just go forward here. Now, I bought Bitcoin last year. Okay, I bought it when it was in the teens. All right, I didn't think it would go up to 40, 50, 60,000 this year. I bought it because I thought it would go, back up to the 20s, and I didn't expect the big move up. Now, was I lucky or was I smart? Well, I was smart to buy it in the sense that I thought it was going to go up. I did not expect it to go up into the 40s or 50s so quickly, but so I was lucky in that sense. Now, when you see a move like this, right? This move, look at that. It's literally a vertical move straight up. This is a 1 minute chart on British pounds, right? This just happened, okay? And people say, wow, people that were buying in here, you say, well, they must have been lucky, right? Because to catch that move. Now, this is a move, right? If you were to look at what's happening here, right? This was basically your range was like this, right? This was basically your range, 85. People say, well, you're breaking out. I mean, honestly, if you go back earlier, we were above there. Now, do you think the people that were buying here, just got lucky or something? But honestly, the activity that's going to precipitate this move up, this straight move up, is coming in here, right? It's not just, people decide, oh, I'm gonna put this position on and, come hell or high water, they're either gonna take profit. There's the big traders, that's why I spent some time talking about the really big traders, are the ones that have access to information that you and I just don't have. We're never going to have. Whether it's, they got a friend that works in a central bank or, knows something about policy that's going to come out. I don't really care. Really what I'm looking for as a trader is, is it going to happen? Is this move going to give me some nice potential? Okay, now if you were to look at the order flow, honestly, what you're seeing in here is very little flow. Honestly, you see two price levels, right? That's coming in, at 950. Let me put a crosshairs on here so it's a little easier to see. Okay, right here, right? Let me make it a little thicker. Crosshair, so it's a little easier to see. Okay, here, 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 here. Okay, now look at this market, right? It just seems to be fairly quiet. You're literally trading the bid and the offer. That's it. Going on right here, trading the bid and the offer, the bid, the offer. One tick below, a couple ticks up, bid, offer, bid, offer, bid, offer. It's a one price level, right? 141.77. It would go 77 bid at 78 or 77 bid at 76, right? It would just trade that one price level, right? You look at it and say, well, what's the point of using order flow? It's not moving. Well, it starts to move here, right? You start seeing some activity come in, okay? Right in here, in here, in here, in here, in here, in here. All right, the market is picking up some signs of life. Now, what are some of the clues? Obviously, the imbalances are one. Obviously, the volume picks up, back in here. You're trading when it's just dead in the water, other than this bar that trades 324 contracts, what do you got in here? A whole lot of nothing. 12, 36, 13, 21, 14, 4, 16, 40, 10, 25, 65, 41, 10, right? Now it starts picking up 100, okay? 25, that's nothing. Well, here was 75, 113, just 25, it's nothing. Then 185, 188, 372, 523, okay? So activity is really, really picking up, right? And then boom, the market pops from basically the 90 area all the way up into nearly into new highs, and we didn't hit 20 yet, but it went all the way up to 18, right? That's, what is that, a 28 tick move, when before your whole range was basically 80 86 to 66, right? So you just double that entire range in about 5 minutes. Okay. But the signs were there, right? If you know what you're going to be looking for in the order flow. Now, some of the clues are, you know, pretty obvious in the order flow, but you're seeing in here, right? If you're looking at the max and min deltas, right? It's got a lot of very little buying, right? In terms of max delta. Max delta is what the what the strongest delta was for a bar. Okay, so you've seen 0, 1, 0, so it's nothing, right? And it's just all min delta, even though it's not much. It's minus 13, minus 33, minus 13, but you don't have that big strong positive delta in terms of max delta. Then all of a sudden it flips in here, right? You got no selling, right? 0. And this one is kind of mixed, but then this one is 0, this one's 1, right? And then this max delta is 43, final delta is 41, 19 and 19, max delta 19, final delta 19, 69, max delta, final delta is 69, right? Obviously, you've got imbalances, okay? Imbalance, imbalance, imbalance. So you know that there's aggressive buyers are stepping in now. Okay, so you add in what's happening in the max deltas, the pickup in volume, sorry, the internal deltas, max and min delta, the imbalances, obviously the final delta. You start picking things up. Now, the problem is for a lot of traders, it's hard to pick that up, right? Unless you got a lot of experience, looking at the chart. And watching order flow, that you can sort of see how it really picked up. Now, people say, well, earlier you got a lot of max and min deltas going back and forth here. Yeah, but you got no volume. All right, 10, 25, 65, 41, 10. That's not very strong. You want to see volume. Excuse me, you can drink some water here. Okay, sorry. You need to see that volume really pick up for the market to move, right? Because market's not going to move unless it has someone moving it, right? It's just not natural gravity in the sense of moving up or pulling something, right? It needs that impetus. And remember, right? If you sort of scrunch in this chart, this market was sort of on a bit on a downtrend, right? We were, I mean, look at this, right? We were here at, change this crosshair. Why is it white? Should be black. Right, we were trading here at 99, just under 142.00, working our way down. We got a lower high, lower low, lower high, not necessarily lower low, but then it just stopped and reversed and went parabolic, right? Went straight up, okay? And that's where reading what's happening in the order flows is going to help you, catch those moves, right? Those are those moves that, as a trader, you want to have. I mean, ideally, yeah, it's nice to, catch the move, the intraday moves, because not all moves go parabolic, like literally what just happened here, right? A lot of times you're looking at these smaller moves down here, some sideways activity in here, and catching that parabolic move, a small move up, on a holiday, it's tough, right? As a trader, right? You as a scalper, that's why I prefer to scalp, because I know that I'm not necessarily looking right now for these big moves unless a scalp turns into a longer term trade. And how do you turn a scalp into a longer term trade is by understanding the order flow, right? What's going through in the order flow. And there's a lot of other little clues that are going to give you um, reasons to stay in a trade, right? So being in a trade, if picking up what's happening here, right? The imbalances, all that stuff, the delta, the volume picking up, and you're in this trade, right? You're long, we'll call it 90 right here at this POC. Okay, you're in this trade. Trade comes 2 ticks against you, not even 2 ticks, 1 tick, right? You're long at 90. It only trades down to 89 and immediately shoots back up. Okay, so you're in the trade. What are you going to be looking at for signs of staying in a trade, staying in a move, especially if it's, you don't know if it's going to go parabolic or if it's just going to go up here and then sort of turn around and come back down. Well, you want to be looking at a few things. One, obviously, is where the point of controls come in, right? Are we going higher in the points of controls, right? Do we have, obviously, you want to see green bars, right? If you're long, right? That's just a basic one, right? If you're getting long, and the next thing you see is a bunch of red bars, chances are it's not going to work out. That's nothing fancy. That's just common sense, right? But if point of controls are moving higher as well, that's a good sign, because the market is facilitating trade at higher price levels, which is what you want to see. Okay, you want to see the markets go up with higher volume at new levels, right? You don't want to see the markets just sort of poke higher, but then come off and start trading heavier volume at lower levels, right? That's not a good sign. Now, you also want to see, obviously, you want to see positive delta, right? But you're going to say, oh, this bar has got negative delta, minus 33. That's bearish, isn't it? All right, or this green bar's got negative delta. Isn't that bearish because it's negative delta and the sellers are in control? Well, that's where understanding what's happening in the order flow is going to help you. Just because you have a green bar with negative delta doesn't necessarily mean sellers were in control. It actually has an opposite meaning. It tells you supportive buyers are present. Okay, I'm not going to say in control, but they're present. Okay, so you got minus 33 on the delta. So that's telling me that there were more sellers than buyers in the bar, obviously, but at the same time, the bar closed higher. So somebody is bidding on this way up. Okay, they're basically absorbing the selling that's coming in, right? We're starting to break out, right? We just broke out of 85, starting to go higher. So there's sellers, trying to sell it back into the range, right? You have all these guys here, right? They're selling it, looking for this market to sort of come back into this range as we're breaking out. But as we're breaking out, you have people bidding the market, putting bids in the market that are literally absorbing what the aggressive sellers are throwing at them, right? That's why you have that negative delta on these green bars. And it's very evident when you get to this bar right here, right? This 124. Now the point of control is a little bit lower, right? It's 1 tick lower than the previous one. Overall, the trend is still up. I like it when you got green bars and you're looking at a point of control in the next bar that's lower than the previous bar, because it's telling me the market was trying to facilitate trade lower, but there was someone absorbing all that activity and the market traded higher. Obviously, you've got buying imbalances way on, on the top of this bar. So people say, well, you got a new high, you got the negative delta minus 107. Yeah, but the bar closed up, right? So there was somebody there absorbing it. And you can see it just by looking at the footprint, right? The 124. So even those people were selling it here just off this high, right? At the time, 04 was the high. People were coming in, selling it, okay? And it just, they couldn't move it lower because there was someone absorbing that, right? You had the absorption happening here as well, the 144, but this one's more obvious because it just sticks out with the negative delta. And the sellers finally gave up, right? And once the sellers gave up, the smart traders realized the sellers sort of, you got no more bullets left, so to speak, and the market starts moving higher. Aggressive activity comes in with these buying imbalances, and boom, the market goes up to the new highs. Now, then we just sort of went sideways. I think we're closing at what, 10? What time's the close today? 12 or 10:30? I can't remember on the holiday. But right now we found that new level and we're just sort of going sideways again. Okay, so understand, what's happening there in the order flow is going to help you stay in the trade. Just because you got this green candle up with the negative delta, that's not a sign to get out, right? You got to start looking at what's happening in the order flow in the sense of, our points of controls going higher? What's the delta telling me, right? Because you could say, well, yeah, delta's a negative, that's bearish. Well, yes and no. It's bearish that you have aggressive selling coming in, but it's actually bullish that you got someone absorbing all that selling, right? And the markets, again, still work their way up. The imbalances, people say, well, you got this selling imbalance, this 31 here, you got this selling imbalance, this 48. But again, these are on markets that close higher, right? Bars that close higher. So I know that it's someone absorbing it, right? In green candles, right? Generally, you're going to see buying imbalances, right? Up candles generally have buying imbalances. But when you start to see selling imbalances on candles moving higher, it's telling you it's a sign of absorption. People were coming in here trying to sell it, right? This yellow line right here is unchanged, okay? So, people were trying to sell it as we were breaking out of the 85 area, then back up at unchanged. They're trying to sell it to get it back into the range that we just were. But you have strong passive buying. And that's when you understand the difference between passive buying and aggressive buying and where it comes in, and where it's important, that's what's going to help you as a trader, right? Because if you're breaking out to new levels, okay, and you just see aggressive buying, okay, maybe it's FOMO, people say, oh, we're making new highs. Um, I got to get involved, right? Just like everyone when Bitcoin was at 62,000, or 62,000, new highs, I got to buy more. And it's easy to fall into that trap. But when you see this, right, when you see the supportive buying coming in as you're breaking out, whether to new highs or of a range, when you see support, people saying, who's really doing the supportive buying, right? Do you think it's the retail traders or the bigger traders? Oftentimes it's the bigger traders because they're doing a combination, right? They're not necessarily just lifting the offers, they're also working bids because they want to get a good price, right? A lot of times retail traders are just, I mean, retail traders do work bids and offers, but it's small size compared to the big traders, right? And that's why I say you got to understand, like I said, the real money accounts, you know, if we're breaking out of a range, like today, okay, today was, again, it is a quiet day. We're sort of breaking out of this range. I'm not saying, real money guys are coming in, but, if we're breaking out of a yearly range or something, you see that type of activity, right? Again, they're say, oh, okay, we're starting to break out, we're starting to move. Okay, they'll work bids, right? They'll lift offers, they'll split it up. I mean, these execution algos nowadays are very sophisticated. What used to take a execution trader to do the algo, you just type it in and it knows exactly what to do. It's going to work bids, it's going to lift offers as the market starts moving higher. It's going to raise its bids. It's going to lift some more offers. Again, it's in a sense, it's moving the market, but trying not to, right? That's why you see a lot more volume traded here on these bids, the 31, the 42, just, even in here, the 124, the 48, the 19, the 27, they're feeding it into the market, so to speak, without trying to necessarily lift the offers. But if the market starts moving, then yeah, it'll get aggressive. Um, Someone's asking, this is just the high and the low, right? This right now, this line here, this green line, this dotted line is the high of the day, right? That's why you see it keeps changing. I don't have unfinished auctions turned on right now. This line here is the opening price. This red line down here is the low of the day. Okay, in case you're wondering. So that sort of takes me on to the next. Again, I was seeing that this parabolic move here in the British pound today, it was just very apt, right? It came right as we started this webinar because understanding the different types of moves, right? The parabolic moves. You have to realize, again, this is why when it comes to trading certain markets, you got to understand, can the market have a straight up and down move generally? Like to me, that British pound move is what I would consider the parabolic move, right? It's just literally shot straight up here, right? I mean, people say, well, it's not really a parabolic move. Yeah, to me, that's a parabolic move. If you look, when people talk about it. But again, at the same time, your market has to have that ability to do it. Now, people say, well, NASDAQ, is very volatile. It should be able to do it. Yes and no. It has these quick moves, but oftentimes it reverts it right back in the next couple of bars. It's kind of a frustrating market to trade in that sense. That's why, grain markets and some of these other markets that really, in my opinion, follow supply and demand a lot better than the equity markets are better for trading. Okay. So, um, before I get to the day and night sessions, let's sort of go back and um, we'll talk about a couple other markets real quick. Now, another market that's really popular with, I'll say, with the kids nowadays. Um, well, okay, that's wheat. Let's talk about I don't know. Um, let's take a look at silver, okay? Because silver is one of these markets that a lot of people are interested in nowadays, partly because of the whole GME and all that stuff that's been happening. Now, is it a market that can go parabolic? And for me, when I talk about parabolic, I'm not necessarily talking, um, on a daily basis, right? Again, I said I'm more into scalping. I'm a much shorter term trader than normal. Um, than normal than I used to be in the past, right? In the past, I used to be willing to hold positions a lot longer than I am now. So, last night in silver, I think there was let me just throw up a silver chart in here really quick. Uh, let's go here. Where's silver here? Just okay. So there's some moves like here, right? Literally a nice straight up move. Let's go back to the night session because that sort of leads into what I want to talk about next. Um, the night session, okay? Because I realize a lot of people live overseas or they have jobs during the day where they can't necessarily um, trade the markets during the day session, right? Which is where people think a lot of the activity is the best activity is going to be happening during the day session. Well, you get a lot of movements at night, and when you're a small retail trader trading 3 lots, 5 lots, you can trade the night session pretty easily. Okay, so here you got this one bar, right? It went from 28.08 all the way up to um, 28.25. I'm not gonna say it's a parabolic move, but these are those bars that as a trader you like to get. Unfortunately, this is the type of bar that you take. It's going to take profit, pretty much in the same bar. Um, but if you're watching the order flow in here, you can see the clues, right? There's clues to be had as a trader in the order flow. Okay, this part here is garbage, right? Honestly, there's nothing to be had here. Okay, if you're reading the order flow. And as a young trader, I'm sorry, when I was first trying to read order flow many years ago, these bars would always drive me up the wall, right? But even when you see that, there are clues in here if you're watching the delta, but bars that trade 3 contracts, 5 contracts, 8 contracts aren't going to give you much to go off of. You really need a little bit more volume. And when the volume starts to pick up here, 128, 67, 65, it's giving you a clue. Okay, we're at these highs, come off a little bit, right? And then boom, you just shoot straight up, right? That's the bar that you love to take as a trader, right? The big, wide ranging bar straight up, right? But you had plenty of opportunity to buy in here, 11, 10, 09, markets coming down, right? But the clues were in here early, 2 bars earlier, right? This little blue up arrow is actually the signal telling you to get long, but it's based off what's happening in these earlier bars, right? You're seeing imbalances, right? You're seeing nice, strong, positive delta, nice, healthy volume, excuse me, and the market, boom, popped straight up, right? Popped up to new highs, sort of come off a little bit, and then boom, just made that big big move up that, as a trader, those are those bars that, you want to um, participate in, right? And that's happening in the night session. Okay, let's just go back again, since we're talking about the night session. Um, what day is it? It's 20. I don't have a calendar in front of me. Go back. Well, I remember sort of the 27th into the 28th, the night, right? When we're on 2790 or something. Where was that here? About, make sure I got the right day here. 20, oh, May 27th, 28 is what I'm looking at. Okay, right in here. Okay, we're at these highs of the days. Nothing really super exciting going on in here, right? You see just average volume, right? Now this is at 1 in the morning, okay, when Europe is opening up. But you see volume is starting to pick up. Okay, volume, you're seeing some bars, 74, we're at the high. If you're at the high of the day, you want to see some decent volume, right? The sort of the worst thing that you can happen is you get up to the high of the day and volume just really dries up, right? When you're at the high of the day, you should be attracting some sort of new buying or selling. And if nobody's interested in participating at the high, chances are that high is not going to hold, right? It's probably going to and come off pretty sharply. So you can start seeing things in here in the order flow, right? You're at this high here, 55, right? The volume here was, as you're making this new high, 83. That's what you like to see. 2 bars later, it's 74. Okay, then it just goes very quiet, 29, 13, 20, 17, 21. Okay, then it starts picking up 55, made a new high by 2 ticks. Okay, then 29, and then 48. Okay, it's decent volume. Okay, it's a little bit above average because your average is probably around 30 contracts. Well, you're at 48. 42, okay, but what do you start seeing, right? You start seeing points of controls migrating lower. Okay, you start seeing obviously these negative deltas, minus 13, minus 24. You're seeing very small positive deltas. Now you're at your high of the day. Okay, remember, you got to think. As an order flow based trader, you got to be thinking, well, what's going on? Okay, we're at a high of the day. Are we going higher or are we going to come off, right? And the sign that we're probably not going higher is you don't see much aggressive buying coming in. 5, 7, 1, 1. Then you got negative deltas, minus 6, minus 4, minus 14. That's not a good sign. Okay, so you're at the high. So you gotta be looking. Now you're sort of your thought process should be like, well, okay, we're at the highs of the day up here, right? That's this green line, but new buyers aren't being attracted into this market. Okay, and so you gotta start looking for the negative signs. So this bar obviously got negative delta, minus 13, minus 24, zero buying in the sense of max delta. And I'll say that's no buying at all. It's just no, not aggressive buying going through the market. Okay, it's just 0 and 0, right? At no point where the aggressive buyer is in control as you just made that new high. Okay, so again, that's another negative sign. The min deltas were close to the min delta numbers, minus 25. We close at minus 24, minus 17. We close at minus 13. Okay, but again, really one of the big clues is we're at the high. We're sort of just going sideways, but you got very little aggressive buying, right? People aren't FOMOing into the market, so to speak. Okay, so what do you think the market's going to do? It's not going to go higher, so chances are it's going to go lower, and yeah, it does, right? If it's not the big move, but again, what type of trader are you? Are you a scalper or a day trader or intraday swing trader? You're getting short. There's plenty of opportunity to be getting short in here, right? At this level, 85, 86, 85 and a half, 86, even in here, 83 and a half. This is 83, 83 and a half, 84 in here. This is 5 minutes to get short, okay? Then it starts moving down, right? You have plenty of opportunity to get short. So, I know people think, well, I'm gonna be a scalper. I'm gonna be in and out very quick. Now you're trading silver in the night session. Okay, moves take sometimes a little bit longer than normal, but if you're short, you're still going in your favor, right? This time it's a little bit sloppy order flow in the sense that yes, point of controls are migrating lower. Delta's kind of mixed. These deltas honestly are kind of small. Okay, -5 to 3, but that's good if you're short, right? Because if it was +20, +30, you'd be seeing the market, I think, in my opinion, reverse and start going higher, right? Then it just sort of goes sideways in these two bars. Then you get that push back down to this yellow line. So, it's a move from, 85 and a half, 86, or even, 83, 84 down into the 70s, right? And it just sort of grinds in here. Yeah. For me personally, the opening price acts as a magnet, right? If we're coming down from above, we hit it, I expect the market to sort of rotate around it, or if we're coming up from below, I'd expect the market to um, also hang around that area. So, it's, another market really quick. It's really one of my, I'll say one of my favorites, but again, it's not a glamorous market for a lot of traders in the sense that, oh, what do you trade? I trade NASDAQ or I trade E-minis, but it's soy meal, okay? Um, just give you a perfect example. Let's go back a few days, and it's closed today. Usually on these public holidays, it's closed. But on the 26th, there was this brilliant move up. I think it was the 26th. Where are we here? What day is it? Oh, it's the 27th. That's why. Um, okay, this red line is the low of the day here. Okay, right in here, right? What you're seeing in this order flow is very bullish if you know what to look for. Now we're at the lows of the day. People, it's, I always say when I'm at the lows, I'm not trying to pick a low, but if the order flow it seems to be changing um, from bearish to bullish, yeah, I'm going to be looking to get long. I'm not necessarily looking to get short because I already know when you're at the low of the day, the order flow is bearish, right? But I'm sort of looking always for that change in the order flow, and it's starting to come in here, right? And so remember what I was talking about, what's happening in the max and min deltas, okay? So obviously this bar, okay, let's just take it back a little bit here. So the low of the day is here. You see some buying coming in here, right? This market is trying to move higher, right? You're seeing zero, very small min deltas. The selling seemed to have dried up, right? -1, -8, 0, 0. This is the min delta. So it's telling me the aggressive selling was kind of weak. After we made this low, even here, -2, -13, then -1, -8, 0, 0, right? Then it's mostly max deltas, 98 and close at 91, 74, close at 64, 107, close at 106, 24, okay, close at 4, but 27, close at 23, 54, 32. It looks like it's trying to move, but then it doesn't happen, right? The buying just dried up and you went 0, 1 on the max deltas, and it's all min deltas, -41, -111, right? This bar closed at -109. Then this bar is kind of mixed, right? It's got a nice positive delta, but it's also got the min delta. Here we've got min delta -14 and +25. Again, another mixed bar, closed -9. Then this red bar, it's -55, which is the min delta. The final delta is -55, but max delta is 0. Okay, that looks like a prototypical bearish bar, right? But then, as so happens with order flow, it changes, right? That's what traders do, right? They make decisions, right? And it shows up in the order flow. Now you see here, it's -5 on the min delta, right? So where's your selling? It's gone, right? Max delta is 75. We close at 64 in the max delta, right? Then the next bar, -3. Max delta is 42. Final delta is 31. Okay. So I know that it's changing in here in the order flow. It's gone from, this was bullish order flow, but it couldn't make that move. then you had some bearish order flow. Now we're back to bullish order flow, right? So if you're at bullish order flow, what direction are you going to be looking to trade in, right? You're going to be looking to trade in on the long side, right? And then it starts building up in here, right? So even if you're not convinced yet in here, right? Say, well, yeah, you know what? It was bullish, it went bearish, now it's back to bullish. I want to give it another chance. You can, okay? You don't have to get long right away. Watch the order flow, okay? And by watching the max and min deltas, look at this. These bars from 916 to 909. Min deltas 0, minus 27, 0, 0, 0, 0, 0, 0, minus 1. But 0, 0, 0, 0, 0, 0, right? The max delta relative to the final delta is 22, closed at 19. 18, closed at 18. 63, closed at, 64, max delta, closed at 63. 52, closed at 52. We're closing on our max delta numbers, or very, very close to it. 37, 21, 17, and 15, 25, 10, 16, and 7, right? 63 and 61, right? But then look at that move, right? It's a move from, well, from in here, 379.5, but, say you weren't convinced yet in here, like, oh, I want to give it some more time, I want to be sure, after this big stretch from 909 to 917, you should be convinced that there's buying in the market already. Again, it's not trying to predict that, we're going to come down into the 378, 379 area, then we're going to rally. No, it's the order flow telling you that this market is primed to rally. And it goes from, even in here, 379.5, all the way up. Didn't make a new high, but it got all the way up in here to, almost 389. That's soy meal. It's $10 a tick. Okay. 379 to 380 is $50, right? 380 to 381 is $100, $200, $300, $400, $500, $600, $700, $800. I'm not saying you'd sell at 389, but you would have caught this move up. And where is the real bearish order flow coming in? It's after you hit 389, but it's coming in, 387, 388. You can start, obviously you can start seeing it in here, but catching this move, even catching 2 points, 3 points, even just catching it from here, 380 right in here, the 382.5, even here, 383, what did I say? 380 to 383. That's a $300 move, right? People are just, these are markets people aren't just even paying attention to, right? So that's why I talk about these markets that, they don't understand. So, I talked a lot about reading these order flows, right? And day session and night session obviously is a big thing. So what I want to get into now is this new tool that we have to recognize that in what's trading in the order flow, right? It's the new indicator that I got. It's called the FlowsDriver. Let me find my freaking screen here. Or FlowsDriver rather, right? And when you see these charts, okay, right, with the blue arrows, the red arrows, this is the FlowsDriver, okay? And there's different settings. And again, that's why I say, understand what type of trader you are. FlowsDriver is not for somebody that's a swing trader, right? It's not for, if you find yourself as a long-term trader, swing trader, or even intraday swing trader, this is not for you. I'll be honest with you. So don't waste your time. But if you're a scalper or a day trader, right, you're going to find this tool very helpful, right? A big addition to your trading, okay? And when we created it, again, this was not something that go back to the British pound, that I necessarily wanted to release, but this was something that we've been working on, and the last couple of weeks I've been sharing it with a few other traders, and they've been interested in it. So I sort of put this together for you guys today, if it's something that you'd be interested in, especially if you're a scalper, right? And the settings are very simple. Okay, so there's It's just this, right? The main setting is going to be the balance strength, swing filter, whether you want to look for swings, sort of longer term trades or not. Depending tight markets, delta analysis, sort of equality in the order flow. And I purposely kept it simple, right? We put in a lot of that analysis that I just talked about is already inside the algo, right? So really all you're trying to adjust based on your market is balance strength, whether or not you want to use a swing filter. But you can see those moves, right? Those nice big parabolic moves up. Now, this is just a gift, right? As a trader, this people ask, what's the best type of chart to look at? Is it a time-based chart or a tick-based chart or a range-based chart? It really depends on you. But honestly, if you are trading a range-based chart, by the time these moves happen, you're let's go to a range-based chart. I don't know, let's choose an 8 range. I used to look a lot at 8 range charts on the euro currency. You, in my opinion, are going to be missing out on a lot of the moves because range-based chart, the bars form, you know, as the range keeps growing, it keeps expanding, so to speak. You put in those many ticks, then it forms a new bar and a new bar. And sometimes I just found myself, especially when I used to use a range bar, sort of what got me off range bars is I used to trade a lot of mini Dow. And for a range bar, when a market is moving very fast, I just found myself getting into trades a little bit later than normal. At least with a time-based chart, it sort of gives me a better grasp on getting in and getting out, right? Because if you're watching the bars and you're trying to watch the order flow, but the order flow is just happening super duper fast, it's it's just going to be a bit difficult, right? Because on a range-based chart, you're looking at 4 or 5 bars by the time you get in. That's just my own opinion. But again, if you're trading slower markets, it's probably not going to be that big an issue. So that's all what I was just talking about with reading what's happening in the order flow and catching those moves, because there's always signs, right? As a big trader, they're always thinking of how can they get in without moving the market, right? They don't want to move the market to tip their hand about what they're going to do. So they're trying to finesse their way basically into the market. Okay. Now, I'll give you an example. Let's take a look at gold. Okay. Gold is a nice market to trade. Um, it moves a lot. There's a lot of price movements up and down. Now, again, you can see here it's calculating. Just give it a second to come up. Okay, so the default settings of FlowsDriver is it's pretty simple. Whoops, here it is. There's a footprint chart. Again, if you want to look for swing movements, you would enable the swing filter. Okay, I have it disabled because again, if you're an intraday trader or you're a scalper, you don't want to wait for swings, meaning a recent swing high or swing low. Delta analysis, if you want the bar to have confirming delta, meaning a up candle, you'd have positive delta, or a down candle, red candle, you'd need negative delta. Tight markets are specifically for markets that trade in small ranges, right? Like for example, you know, this is a small range. Like if you're trading night session, you'd want to keep it on tight markets, okay? And go back to the settings. Balance equality. Basically, you want to make sure that the the order flow in the bar is equal. It's just a filter what balance equality is. You don't need to use it. But really the main things you're going to be using is the balance and balance strength. Now you could turn it off, right? If you don't want to use the balance strength, and the algo will work out all the other stuff in the order flow. Okay, so when you turn it off, you're going to get a lot more signals. Okay, and again, if depending on the market, if you are a fast trader, meaning if you are a scalper, um, you probably want to turn it off because a scalper in a pure sense is just looking for the next few ticks, right? So if for example, if you're trading on a dome, right, you're going to be looking, okay, here's, I got a signal here. Maybe I'll try to buy it on a pullback and scalp, right? Back in here, it's a little sideways. But again, it's not meant for every market in the sense of turning it off. Now, there's some markets, for example, okay, here, let's just show you, right? This is, what is this? British pound. If I were to, it's a little easier to show it to you, the differences on a bar chart than a footprint chart, because there's only so much real estate on a chart, on a footprint chart. So again, so this is with the balance turned off, right? So when you turn off the balance, it doesn't matter what the strength is because it's not going to read the balance strength. So basically, this is like if I were to turn everything off here, right? Tight markets, balanced equality. Well, actually, I should keep tight markets on, but balanced equality, balance strength, balance disabled. Okay, that's about as free as you can go. Okay, you're gonna see there's a lot more signals right now. You're seeing some sell signals in there. What do you got? You got some buy signals here, but you can see, right, it's catching the move down, these little moves up. We all want to catch these moves like this, right? But not all markets have the capability to make moves like that, right? But again, this is 8 o'clock at night on a Sunday weekend night, right? But there's still movements, right? I mean, this is the part that kills me is people say, no, I can only trade NASDAQ and I can only trade it during the day. Well, there's so many other markets to trade at different times. I mean, look at this. You're talking a move from 86, 87, all the way up to 98. That's 10 ticks in the British pound on a Sunday night, right? During the day, you're going to get a lot more signals, right? That's why I say I talk about the night session. Let's just go back to the night session, right? This is the 20 Friday or Thursday night into Friday morning. You don't have these algos messing around with you, that you see during the day. I mean, look at that. That's a nice move down. Okay, okay, you get stopped out on a couple trades there. Then you catch this nice move back up, right? So whatever you lost on these trades, you're getting back there, right? But again, this is with the setting turned as low as possible. Now people say, well, why would you turn the setting as low as possible? Well, there's going to be some markets, for example, like ultra bonds. Ultra bonds, fantastic market to trade. Margin is a bit high relative to other markets. But look at that. You're talking a move from, this is your signal here, right? The 12 area, 11, anywhere between 10 to 12, all the way up into the 20s, right? That's $30 a tick, right? Ultra bonds. This was Friday during the day. Yeah, a couple small scalps here and there, but then you catch that nice overall trend. Right, nothing happening in the night session. This was the day before, right? This is what the settings turn basically as low as possible, right? Nice moves down, a little move up, a little move down. Okay, this one probably stopped you out. But again, depending on how you're if you're a scalper or a short-term trader, you can catch a lot of this activity that's going on, right? People say, well, there's not much of a move here. Well, you just had that massive drop from, the 20 area down to, down to 10 almost immediately, or even down to 05 in here, or even where you're getting these buy signals. Now, those are those moves that you want to catch. Let's take a look at other markets. I don't know. I think I'll look at DAX. Well, yeah, I think I'll look at DAX. DAX is an interesting market. It's a market that's got a lot of price activity. There's a big drop from, this area. This is where you earn your keep as a trader, right? You getting those small scalps, getting the little move down, the move up, the move down, the move down. The break even, small loss, covered it in here. A little move up, then the massive move down like that, right? That's what you want as a trader, right? And again, this is at its very basic level, right? This is about as low as you can get on the settings. Pretty much everything turned off, except tight markets. But on a market like DAX, it's not going to matter. It's basically going to get the same signals, right? Bunds, right? Since we're in Germany and in Europe, how does it look here on the Bunds? I haven't looked this morning on the Bunds. Okay, some movements, some movements. Again, it's a quiet day, but okay, you try to take this trade here, it doesn't work out. You take your loss or you break even, then you catch the next move, right? 62 all the way up into the 80s. Then you're done for the day. You don't have to trade this nonsense back and forth later. I mean, you could if you're a scalper, but you catch those moves just like that all day long, right? Here. Those are those moves as a trader you like to get. So again, this is a new indicator. There's going to be more. This is sort of like an impromptu session today. But if you're interested in it, it's called FlowsDriver, okay? And you just go to www.flowsdriver, okay? And it takes you to this page, okay? People ask, how can I use order flow on stocks? Okay, I'm not going to get into the different stocks, but on this page, you're going to see a lot of explanation, right? You're going to see here's Euro currency, mini Dow, MNQ, silver, wheat, all with the same settings, right? You don't need to vary it, change the settings that much. I mean, for certain markets, yeah, and I have a user guide with this that is, helps you guide you, on different types of markets. But stocks, okay, now GME, is just a popular stock because it's, everyone's talking about it. But balance strength, balance, swing period is enabled, swing period set to 1. Okay, this is GME. This is Tesla, right? The other day we had this nice move up, 27th, this nice move up late, right? You had some nice moves down, okay, but those are those nice big parabolic moves you want to catch. Same settings, Netflix, right? Right before that big parabolic move up, the signs were there in the order flow. People say, well, yeah, you had this short here, it didn't work out. Okay, fine, that's trading. Not everything is going to work out 100%, right? But you want to be in the market for when that move happens, right? That big parabolic move up. My favorite, JP Morgan, gotta love those guys. I say that just because I used to work there, but you're seeing it all in the order flow, right? So whether you're a stock trader or Facebook, right? 27th again, all these I think are the 27th. I think JP Morgan was Friday, but that big move up in Facebook, even late in the day, that big move up, right? The moves down. So again, if you're interested, right now we got a special on FlowsDriver. You just click there, it takes you to PayPal. Boom, right there. It's very simple. It's a great tool. If again, depending on the type of trader you are, if you're a swing trader or you're looking to buy and hold for a few days, honestly, it's not for you. But if you're a scalper, and a day trader looking to catch some decent moves during the day, especially at the night session, let's again take a look at. Let's take a look at E-minis. Now again, I have this set as weak as possible in the sense of the settings. So but I'm kind of curious. I haven't looked at it overnight tonight, or last night rather, but see, it's calculating right here. It runs on NinjaTrader 8. It doesn't run on anything else right now. But again, you could use NinjaTrader as your charting platform. Okay, so here, right, since the reopen last night, it was giving some nice little bullish signals for some decent scalps. People say, well, it's not much of a move. Well, it's actually a move from, the 07 area up to, well, I'll say 10, but, 09, a couple of points. Honestly, though, I haven't looked at it since last night. But look at this move here, right? 2 in the morning, 2:30. The 7.5 area down to where you get the bullish signals at, 02, right? And getting some bullish signals that just went sideways on you. But let's take a look. But again, this is as almost as weak a setting as you can have. This was Thursday night into Friday, right before that big jump up in here. This was where the order flow was telling you, hey, you know what? Something's getting ready to happen. Sometimes you just get moves like this or this, but then you're going to get the moves like this from 12, 11 and a half down to 08, right? Then you're going to get a little bit of sideways activity and back and forth, up and down, little scalps in here. Let's take a look at another day. But again, this is what the setting turned literally as low as it could possibly be. There's no refinements on it. Okay, not that great going on in here, I'll be honest. Um, you know, get some small price movements up here, some small price movements down, small price movements up. Then you could catch a nice, decent move from finally in here, 87 all the way down to the 80s, low 80s. Some movement back up here. You know, some movements back down. Take a look. I don't know if I got another day in here. This is what day is this? Wednesday, right? We reopened. Okay, got a bearish signal, nothing happened, then bullish. Again, from the 90 area right up to 94. You know, this is 93 and a half. Okay, bearish. Okay, doesn't work out. You take a small loss. You can get it back on this one. You could have got something out of that trade. Could have got something out of this trade. Then a little back and forth in here. Then boom, the parabolic move down, so to speak. It's not as dramatic as like what you see on during the day session, but why? The participants at night are different than the participants during the day, right? But imagine you, and this is what I like about minute-based charts is you have time, okay? Just because you got this big move down, right? Imagine you're getting short in here at 97. You know, this is 97 right here, but you got time in here, right? You got two bars in here, 3 bars to be getting short around 97 and a half, 98. And then it just drops all the way down to, you know, 93. And it just sort of holds in here. It's a 5-point move in 2 minutes. Okay. Then on the way back up, move. On the way back down, another move. So you can see, you know, there's whether you're trading, you know, equities, currencies, it doesn't matter, right? Because the order flow is the truth. Okay. It's something that you can use. Now, question is crypto. Can I use it on Bitcoin? No, you can't. Partially because, well, forget about the CME Bitcoin contract. There's just not enough volume in there to really give you anything good. Even that micro Bitcoin, you know, I'm super excited for that micro Bitcoin. I hope it does take off. You know, I hope it becomes as big as E-minis. I don't think it's going to. I don't even know what the chart looks like right now. I think it's MBT. I haven't looked at it in over a week. The volume is just not there. It's depressing actually. What is this? Well, it's a minute. Is it MBT? I think it is. You know, the thing people don't realize with exchanges. Where's micro? I want MB. Oh, I got it. I don't have it on here. Well, anyway, yeah, this is the stock MBT, not the futures. Is a lot of times when an exchange launches a new contract, they pay people to make markets in it, so it looks like there's a lot of liquidity. You're not going to get much information when there's pricing jumping around like this. This is the MBT. You know, even though, you know, there are some signals in here, I'd be wary of it when it trades one contract at 55 and it trades another contract at 700 and everything else is nothing. It's not good. The problem with NinjaTrader and the crypto exchanges is NinjaTrader doesn't want to lift the freaking finger for the crypto exchanges because they're so heavily invested in the futures market with NinjaTrader brokerage that they're not really allowing these other exchanges to feed their data into NinjaTrader, which is a big mistake in my opinion. You know, people ask me, you know, why don't have this good relationship with NinjaTrader anymore is because they became so focused on their own brokerage that they sort of left out a lot of other space. If they would make NinjaTrader available to people to hook up to, another exchange like a crypto exchange, it could be great for NinjaTrader, but that's not their business plan right now. So that's micro Bitcoin. I mean, can you? I mean, there's signals, but again, I'm always wary of markets like this where it's just a lot of zeros in there. Even if you look at the big one, the main contract, which it looks very similar in volume wise to the small contract, but it's like this, right? A lot of these, a lot of this, it, trades one contract, trades two contracts, trades two contracts, one contract. Um, and again, it looks like this is a minute based chart, but this is from 10:08 to 10:15. So that's a 7-minute gap in there, right? Here from 9:20, 9:19, then the next bar is at 9:24. There's just not a lot going on the futures contract. I really wish it would do good, but right now it's just not um, doing good. Uh, so if you're going to use NinjaTrader, say you have NinjaTrader, because a lot of people we buy stuff like platforms with the intention to use it, and we end up not using it. If you have NinjaTrader, all you gotta do is get a data feed, right? You go to Kinetic, IQ feed, um, are the two main ones, or you get it from your broker, right? If you already got a broker that's giving you a data feed, you could ask them if you could hook up NinjaTrader to it, depending on who your broker is, and use it as a platform, right? This will run on a free version of NinjaTrader as well, right? As long as you have a data feed. Okay, so for example, right, I trade in Malaysia, right? I trade the I trade palm oil. Okay, so I have an external data feed for palm oil. Okay, which comes from Kinetic, and I use this there, right? I mean, look at these moves, right? It's I mean, it's kind of shocking sometimes. I don't like to say trading is easy because it's not, right? But there's certain markets. That's why I talk about, you know, look at other markets that you can trade, based on your time zone, um, or your trading hours, and find them. I mean, for me, I don't like, again, I don't like to say trading is easy because I catch a nice move up like this, and then a nice move down like that. Then I'm done, right? This is for that session, right? Yeah, there's times where I start trading here, I take a loss here, take a loss here, but then I could catch that move there, right? I just used NinjaTrader for this market as my trading as not as my platform, because I have another platform for that through the broker, but I just use it as my charting software, right? But again, this market I scalp, so I'm just looking for 5-10 ticks on a trade, in and out, in and out, right? But there's terrific price movements in a lot of markets that everybody has access to. It's just whether or not you want to use it. Nat gas, right? Nat gas is there's times of the year that it has nice movements. Um, Times of the year where it's kind of boring. But again, nat gas here, like that. Again, these settings are the default, I believe here. Yeah, this is 2 and 0, but if I set it at, this is the default setting, 2 and 2, tight markets and balance equality. By disabling the balance, it's going to give you more signals, but it's still very similar, right? On a holiday morning, right? 1 or 2 trades, that's all you need to take. So anyway, guys, I'll put the link in the box here for you. Just give me a second here. What was it? www.FlowsDriver. Where's my chat box here? Again, it's a nice tool to use. Again, it depends on your trading style. Again, if you're a very short-term trader, yeah, I highly recommend it. If you're a long-term trader looking to hold a position overnight, no, it's not really meant for that. You can use it on you know, I've looked at it on 5-minute charts, but really the whole benefit of using order flow is to take advantage of what's happening right now. Okay. Um, Not necessarily what happened 15 minutes ago, an hour ago. So 5-minute chart on that gas. I mean, yeah, there's a buy signal here, right? You got that big move up, sell signal here, a little move down, a buy signal there. Um, that gas the other day, a 5-minute chart. Okay, nothing here, nothing here. I know some people say, "Oh, I lost here, I lost here. I'm not going to take the next trade." That's, you still got to take the next trade. You still got to trade, right? Then you catch the move there. But again, personally, I just find order flow best used on a smaller time frame rather than a longer time frame. I do look at 5-minute charts as well, but most of my trading happens off of the 1-minute chart or the 30-second chart. So anyway, guys, I don't want to keep you guys here much longer. Rockaby, send me your email there. I don't know what you put in the chat. Gary asked for an NQ chart. Okay, let me just, well, NQ, I look, I'll be honest, on NQ, I use a 30-second chart, just because the way the market moves, it's just too much, I'll say too much noise, but I like to, on a 30-second chart, I'm very comfortable on a 30-second chart on a NASDAQ. Now, again, what's the setting on here. Now, due to the price movement of NASDAQ, I max it out. I use 3 and 3. I wouldn't use a low setting because you're going to get a lot of signals with the lower the setting. The highest you can go is 3 and 3 on the setting. But again, let's just take a look at 3 and 3 on here. 30-second NASDAQ chart here. Okay, this is this morning, right? 5:31. What do you think? There's some movements there. Again, today it's a holiday, so it's kind of quiet. Overnight, this is the overnight session. This is in the European hours. Okay, there's a move from 705 area. The signals are coming in here, 705 all the way down to this area where it just sort of comes in here, down to 85. Right, a buy signal that didn't work out. Some more sell signals, a buy signal. Again, in the Asian hours. Also, it's the reopen Sunday night. It's kind of messy. This was Friday's day session in the NASDAQ. Let's see if I can make this a little smaller. So where's the cash open? Cash open is right here. So right before the cash open, you're getting some buy signals. Again, this is a 30-second chart. 30-second chart is going to be different than a 1-minute chart. Friday in Thursday night into Friday, this is how it looked. Some moves up, some moves down. I think that's as far back as this chart goes. So anyway, there will be a recording of this. I'll probably hope to get it out today. Let's see, I go through a couple more questions. Yeah, there's the promotion price, Miguel, is this price. It's 369 now. The normal price is going to be 599. Big Mike, thank you for this. What is the effect of E-mini trading if a robot is used by 1,000 small traders holding the same trade price? Well, obviously, if everyone's trying to enter at the same trade price, not everyone's going to get in at the same price. If you're using limit orders, if you are using a market order, yeah, everyone's going to get in and everyone's going to be chasing the market. But to be honest, there's not going to be 1,000 users using this anyway. But again, the thing with order flow, right? When you understand order flow, you understand, the basic concept of big traders when they're trying to execute. They don't think in terms of order flow. They think of, am I going to move the market? And if I start moving the market, are other traders going to jump in after me, right? And if they got a position they want to get in quickly, they don't want to move the price that much, but sometimes they get sloppy, right? It's going to show up in the order flow, right? And you can pick it up and take advantage of it, okay? So, just because you have more people reading the order flow, that's not necessarily a bad thing, right? That's a good thing because you have more people trading in your direction. Now, does it work for stock option contracts? I don't trade stock options. Um, yeah, you can use it for stocks. For example, like I was just showing you guys earlier, the different stocks. It's on the FlowsDriver homepage. Um, you can take a look at, right? It's then you just trade your options off that. I mean, there's so many different types of option strategies that you can do right now. Even in the futures, you got weekly option, you got very short-term options that you can trade. Um, what is your opinion about equilibrium point between supply and demand? Well, sometimes people get so caught up in supply and demand, they sort of overlook really what's happening in front of them, right? I mean, supply and demand doesn't always hold, right? We always like to think that, when I'm talking about supply and demand levels, which turn into support and resistance levels, okay? Now, there's true supply and demand, which is used by, the really big traders, okay? In the sense of, they got access to information about what's growing in the fields or what's shipping around the world. And, they got a better grasp on it than you and I are ever going to have. When we could draw our lines or supply and demand lines on a chart, but that doesn't mean anything because we are still missing out on a lot of information. We're just thinking in terms of support and resistance. And eventually they don't always hold, right? They're going to break um, and it's going to find a new level to trade. Now, the last question, Taj, what's your thought process for determining take profit level? Well, I have an automatic, whenever I trade, there's always a ATM attached to it with a stop, predefined stop, a predetermined take profit. And if it just goes to the take profit immediately before I could adjust it, okay, fine. But if I'm reading what's happening in the order flow, for example, like, well, let's just go back to, well, like here, okay. If I'm short here at 98, okay, I'll just call it 98, and I've got a 3-point take profit here at 95. Okay, boom, I'm short at 98. My stop is also 3 points. I tend to keep my stop a decent level away. I always adjust it closer once it's in, but I always got to have something in because you never know. As soon as you get into a trade, you don't know if the joker over at Goldman Sachs has got his finger on a button to sell, to buy 3,000 right after I get short. Okay, so you got to have a stop in there and take profit because sometimes the markets just move instantly, right? And I do want to participate. Yeah, I would have loved to adjust it down to 93 and got more out of the trade, but I know I got to be happy with my initial take profit. So that's why I have an initial take profit. And if I see the market, in this case, it just sort of dropped right down to it, okay, fine, I'm fine with that. But if I see the market sort of, sometimes you see it like here, where it sort of goes up, sort of goes, hangs around sideways, and then makes the next push up, you know, getting long at 96 and a half in here. This is 96 and a half, right? The bullish order flows in here. So you're getting 97, we'll call it 97. I got to take profit at 4,200, but it goes from 97, 2 points up to 99. It's just sort of going in here. Yeah, I back it up to 01, maybe 02, back it up a point. So, but it's based on what's happening in the order flow. Sometimes it just goes directly to your take profit or to your stop, but you don't have time to change it, okay? But if I sort of see a grinding higher, building up a head of steam in the order flow, then I'm willing to give it a little bit more space. Now, there's times where I get fancy and I adjust myself out of my normal profit. There's times where I literally would, it's like I'm long from 97. I got my take profit at 4,200. I'm going to adjust it up to 03. Okay. Well, it doesn't get up to 03. Next thing I know, I try to sell twos, miss it. Try to sell ones, miss it. Then I'm back down to double O. hopefully I get it. Otherwise, I got to just get out at the market and, I finesse myself out of the market. That happens. Um, it's unfortunate, but it happens. And I should just kept my initial take profit in. But but if I see something in the order flow that's very conducive to my position, yeah, I will adjust it. But at the same time, it can move very fast that you might miss it. You know, say this move down here is sort of grinding. You move it from 95 down to 93. Okay, that's good. But if you move it down to, um, say, I'm gonna go down to 91 or 90. It only comes down to 91 and a quarter. You're screwed. Okay. Hopefully you can cover it up in here at 93, 94, which is still below your 95 area. That's good enough. But if it makes that push down towards your new adjusted take profit, it doesn't hit it, try and cover it as quickly as possible. But anyway, guys, the link is in the chat there. Check it out. I said I'm sure it's going to be helpful to a lot of people. Order FlowsDriver. It's just www.FlowsDriver. It's very simple, nothing fancy in terms of the link. Just FlowsDriver.com. I said we have the special price right now. Normally it's after this promotional period. Right now it's just $369. Just scroll down here. I mean, normally it's going to be $599. I create a lot of these tools to replace what you're seeing. Again, not everybody wants to use a footprint chart, right? I get that, right? And not everybody, um, wants to spend the time to understand what's happening on the footprint chart. That's why I create tools like this to sort of replace what, the analysis that you're going to be doing on a footprint chart so you can see it on your screen. Again, people are asking about stocks. Here's, GME, here's Tesla, Netflix, JP Morgan, Facebook, right? But again, if you're trading stocks, you want to trade stocks that have good volume, right? And it's easy to check which stocks have good volume. Just go to Trading View and punch up, sort by stocks with the most active, right? The most volume um, there. So again, the normal price is $599, but you can get it right now. It's just $369. So thanks everybody for spending this morning with me. It's Memorial Day. It's a holiday, so enjoy the rest of the day. And thank you for your service, the ones that have served. Appreciate it for giving us the freedom that we have. So enjoy the rest of your day, and bye bye.